Historical data pointing to the potential for a 10% sell-off for stocks in the new year. Joining us now to break down the data and the call here is Larry Tentarelli, who is the Blue Chip Daily Trend Report Chief Technical Strategist here. Why are the technicals casting some cold water out the gates here, Larry?
Well, thank you for having me on. Historically, the first quarter of year one of the presidential cycle it's a little bit weaker. It's the second weakest quarter in the presidential cycle. So we're seeing some chop here over the past few days, some volatility over the past 5 days. So some seasonal weakness into January, first year of the presidential cycle, is not uncommon.
It's not necessarily uncommon, but we also have a lot of potential policy positions that could impact that. How are you rating some of that potential change here, if at all, Larry?
I think the biggest move that we're seeing right now is a strong breakout in the U.S. dollar over the past few weeks. We've seen a breakout in bond yields. Ever since the Fed cut rates, bond yields have pretty much gone straight up. So I think the market's anticipating some policy changes to a stronger dollar, maybe higher bond yields. And I think that's creating some headwinds for stocks, but I don't think it's going to derail the bull market.
Talk to me a little bit more about that. We've got currencies as a potential headwind to equities. We also have yields as a potential headwind to equities. You just said that you don't necessarily think that's going to be a huge deal moving forward, but at what point does that risk tip over into something that is a little bit more tangible?
The big number for bond yields is 5% on the 10-year U.S. Treasury. I think we're right around 4.54. So if for some reason the 10-year breaks out over 5%, then I think the markets would have to adjust lower to those higher bond yields. I don't see it as of yet, but that 5% line, that's the benchmark.
As we were looking at some of the outperformers that had really driven the markets last year, and two of them, Mag 7 names that are seeing a little bit of retracement here over the course of what should have been the Santa Claus rally. We didn't really see that. And the two names that really come to mind here are Apple and Tesla. For those two names and the pullbacks that we have seen and what that could correlate when you have two outperformers like that, now seeing a little bit of a retracement to begin the year, what does that spell out for what the rest of the market have to endure as well?
So what we're seeing with both of those stocks, they both had big breakout moves. So Apple and Tesla both made new all-time highs. With Tesla, the stock actually doubled. So Tesla went from the 240s or so to 485, 487. So it's a sharp pullback in Tesla right now. As far as the charts go, it's still trading over the 50-day moving average. So is Apple. So I think it's a constructive pullback. But with Tesla, you are going to see, I think, a lot more volatility. They missed their delivery number yesterday, but I'm long Tesla and I'm still bullish on it. But I do expect some volatility, maybe over 350 to 360.
At what point do pullbacks become unconstructive? And I'm thinking about, of course, what a lot of people were watching going into the end of the year, which really was NVIDIA and some of the volatility and the sputtering that started to take place there. There's so much concentration in these kind of long Mag 7 trades, and investors are trying to get ahead of any sharper pullback, which actually could bring in some buy on the dippers that are out there just waiting for it as well.
Right. So I use moving averages quite a bit. So the 50-day moving average is pretty widely used in the industry. And as long as the stock stays over the rising 50-day, then it's a bullish intermediate term uptrend. So you've got that with the NASDAQ 100, Apple, Tesla, Meta's trying to break out. So what we're seeing right now, we are seeing a pullback and we're seeing some consolidation. But as you said earlier, we're coming off back-to-back 20% plus years in the S&P 500. So historically, after that, you do tend to see slightly more muted returns, closer to the 8 to 10% range or so. But I am a buy the dipper crowd if we get any types of pullbacks, because if you look at the weekly charts, the weekly uptrends are intact.
I want to grab you with one more question before we head out here, because you do note kind of the potential of that pullback of 10% for the S&P 500 in 2025. What do you think would cause that?
So I think the biggest thing would be if there was a really strong breakout in bond yields, if there was a really strong breakout in the dollar. Obviously, the market's watching the economy, so if there was a recession, which that's not my base case view, and I'm bullish overall. So my year-end price target for the S&P is 65.50, which is about 12% higher from here. But historically, that first year of the presidential cycle does tend to be a bit volatile. And the S&P averages 10% pullback every year. So we haven't really had a full 10% pullback going back to 2023. So I'm not bearish. I do know that we could see some volatility, but I do think that any pullbacks will turn out to be viable.
All right, Larry, thanks for playing along with my bad English, but good colloquialism and buy on the dippers out there. Buyers on the dip would be the correct
I actually like that. I'm going to use I think I like that term. That's great.
We'll coin it together and revenue share on it. Appreciate it, Larry.
Excellent.
Welcome to Blue Chip Daily, one of the industry's premier sources for high-level daily technical and trend analysis. Blue Chip Daily is ideal for both investors and traders of all time frames who want to be on the right side of major market moves and trends. We focus on over 750 large cap stocks, all major stock indices, over 70 exchange-traded funds, bonds, oil, gold, and Bitcoin. Sign up now for Blue Chip Daily, and you will get access to real-time portfolio alerts, premium Twitter page with intraday alerts and commentary, the chart of the day with best idea, daily video and report, and much more. Claim 30-day trial at www.bluechipdaily.com. Subscribe to the Blue Chip Daily YouTube channel for more technical and trend analysis videos and other content.